Last 12 months have seen a big surge in super luxury real estate buying, with Bollywood celebrities like Amitabh Bachchan, Alia Bhatt and business tycoons and CEOs making big ticket property purchases. Today on the Property Show, we give you a flavor of the bigwigs who bought homes in the run-up to this Diwali and go on to discuss, has India's luxury housing market truly emerged from the post-demonetization blues?
Over the past 1 year, billionaire wealth in India has touched record highs. According to the latest edition of the Hirano Global Rich List of 2021, despite the COVID-19 pandemic, India added 1 billionaire every week in 2020. The spillover of this wealth has been a splurge in luxury homes. From Bollywood A-listers like Amitabh Bachchan, Hrithik Roshan, Alia Bhatt, Deepika Padukone, Rani Mukherjee and Ajay Devgan, to business tycoons and prominent corporate personalities such as D-Mart's founder Radhakishan Damani, HDFC chairman Deepak Parekh, Sunil Vachani, chairman of Dixon Technologies, Bharat Serum and Vaccines founder Gautam Daftri, Infosys co-founder Chris Gopalakrishnan, and even the hugely successful startup founders who have cashed out, such as Big Basket co-founder Abhinay Chaudhary, Umang Bedi Daily Hunt co-founder Siddharth Shah, founder of online pharmacy chain Farm Easy, have all spent a considerable chunk of their rising fortunes in buying luxury properties. Not surprisingly that the pandemic has made larger, greener homes with open spaces more desirable. According to data from Zapkey, sales of homes priced at 5 crore rupees and above have doubled in the 2021 compared to 2019, and the year is yet not over. Many of the wealthy Indians such as Pinky Reddy, Juhi Chawla have also made a beeline for villas in holiday destinations such as Goa, Alibag and Kasauli. Sensing the surging demand, developers have reluctantly downsized their luxury offerings, are now back with luxury launches in top cities where demand has been the most robust. Mumbai, Delhi have cornered 29% of luxury home sales, followed by Bengaluru, Pune and Hyderabad. Zapkey data shows a strong demand uptick has been almost equally split between primary sales in new projects and secondary sales in posh locations like Bandra, Worli, Prabhadevi, Lower Parel and Powai in Mumbai, Golf Links, Sundarnagar and Shanti Niketan in Delhi, Koramangala, Richmond Town, Banashankari in Bengaluru. With the stock market at an all-time high and the economy on a mend, the luxury real estate seems poised for good times ahead.
Let's get to more details behind this exuberance for luxury home buying, and we have with us Niranjan Hiranandani, MD of Hiranandani Group, Samir Saran, Managing Partner, India Sotheby's International Realty, and Shubhankar Dongre, co-founder Zapkey. Mr. Hiranandani, thanks so much for joining me. First question. So yes, I'm looking at the Zapkey numbers. Luxury housing sales have almost doubled to 12 months prior to now. But have they really reached the levels of the heydays that we saw in 2013-14 before demonetization?
Yes, we have now crossed that barrier of the earlier year pre-COVID, and we do see that sales have taken place. And the astounding part is that the people who are now buying these have got capacity to buy. So if you really look at the figures which come out from the housing finance companies, they are already saying that the price of the houses which they are buying is about 3.5 or 4 years income, which 5 years ago, if you ask the same question, it was 7 to 8 years income, which means that the house prices, in spite of the fact that they are now looking at luxury homes, the capacity of the house buyer has gone up, which is astounding. I never realized this until very recently, that people's wealth in terms of buying capacity across the board has increased tremendously, though there are sectors where, of course, people are, after COVID have had problems.
So that's a primary market. But Samir Saran, what's been the experience in the secondary market or ready to move in independent bungalows, villas, etc.? How much better have those sales been than, let's say, 2019?
So, Manisha, I would have to agree and say that we believe that there has been a turnaround, and that's demonstrated both from a global perspective as well as from a local perspective. From a primarily Sotheby's is associated with luxury, and that's our name is synonymous with it. So from a global perspective, we had an increase in revenue of about 30% last year, from 115 to 150 billion. And likewise for our India business, we've seen growth of over 40% with an extremely strong sales pipeline going forward. From a macro perspective in a market, we've seen that luxury residential sales across the board of these 7 major cities have gone up by 21%, with Delhi NCR contributing 54% of that and Mumbai 37%.
So Shubhankar, data of course as provided by you is looking very strong, and I can see that most of the luxury buying in that 5 crore plus bracket seems to be cornered by the MMR and the NCR market, but very closely led by, and I was surprised with this, Bengaluru, Pune and Hyderabad. So just give us a flavor of where have the sales been and who's really selling the most, what zip codes are selling the most?
So you're right, as in, it's not that big a surprise that NCR and Mumbai are leading the charts in luxury sales over the past year or so. Each of them contributing about 30% each. So that's like 60% of all the sales just concentrated on by 2 regions. And, close on the heels, like you said, 15% each, Bangalore and Pune. And then the rest is kind of distributed between Kolkata, Hyderabad and Chennai. Look, I mean, from a distribution perspective, let's look at Bombay, for example. Bombay is a skyscraper city. It's an apartment city. The incidence of a independent house sale is almost nothing over here. Similarly, if you look at NCR, most of it, again, around Gurgaon and Noida would be concentrated, to apartments, unit sales. You will get a small fraction of independent home sales in that region, but the other cities, like I said, Pune, Bangalore, Chennai, Hyderabad, they have land, they have the ability, they are later evolved cities from a residential construction perspective. So you will see a larger contribution to luxury home sales from plotted developments, people wanting more space, larger homes, gardens, yards, etc., etc.
Shubhankar, in Delhi, I think Lutyens Delhi is taken off. Jorbag's been hugely in demand. Also, your Shanti Niketan. So that's been a very robust market.
That has, in fact, earlier in the year, you saw that there was a alteration to the circle rates in those particular localities, in Delhi, and that was one of the large contributors also to unlocking the pent-up demand. Look, there is a lot of pent-up demand in India. Of course, COVID has tipped people over into making those purchases. While the initial phases of COVID put pretty much everything to a halt, screeching halt, the government stepped in with incentives. Like in Maharashtra, there was a stamp duty holiday or stamp duty cuts. In Delhi, they relaxed circle rates over there. So this is really pent up, waiting to explode for a really long time. It's not necessarily new demand at all.
All right. So I'm going to go back to Mr. Hiranandani. Mr. Hiranandani, developers had actually now in the middle started shying of launching too many luxury projects because the demand had almost kind of flattened out, if not dipped dramatically. My question is, are you now rejigging the portfolio? Because the margins in high-end projects and high-end flats and apartments is much higher than mid-income homes or even, let's say, affordable homes.
Earlier, we would be able to sell our 1-bedroom, 2-bedroom much faster than our 3 bedrooms and 4 bedrooms. In the last 1 year, we have sold 3 bedrooms and 4 bedrooms faster than our 1 and 2 bedrooms. But that doesn't mean anything in the long run. You will still get affordability and demand for the 1, 2, 3, 4 bedroom flats. So we do a mix and match of all that. The 2 and 3 bedroom flats will definitely be a major portion of our total construction areas. 4 bedroom would be very few and 5 bedroom would be very, very, very small numbers as a percentage. But to tell you the truth, we are looking at both the segments. In certain areas, we are looking at the affordable segments with much more compact floor plans. While in the luxury segment, we are looking at even higher areas that for the luxury segment, because the demand in those areas are different.
Samir Saran, can you give us a flavor of where is this wealth going? So yes, top cities, but is it equally going to second home destinations like Goa, Alibag, etc.?
So we found that the second home market has also really taken off. I have to say that there have been a number of factors driving this prior to COVID as well as during COVID. And one thing I would have to say is that if we look at the budget of people, if they were approaching Goa with a 5 crore budget earlier, today that's almost doubled or tripled. So they're no longer looking at those villas of 5 crores. They're looking for larger spaces. They're looking for back to nature. So as you correctly said, destinations that have proven to be very attractive have been the likes of Goa, Alibag. Locations in the hills have been very, very attractive. I can give you 2 different anecdotes. One about Goa, where a family have felt that the lifestyle offered in Delhi has been, in terms of pollution and other things, is much well catered for in Goa. And in Goa, you have created ecosystems, there's better infrastructure, schools are there. So there has been a steady interest and demand in Goa, which has certainly, been accelerated by COVID and people seeking homes. In fact, I have to say that, we did one of the largest transactions in Goa this financial year, both from a company perspective as well as I think from Goa's perspective for an iconic villa. One would have never have thought of that, but these are the kinds of transactions.
I know, I read about it. It was almost touching 100 crores, Samir. But overall in the market, though, Mr. Hiranandani, prices haven't really moved much. I mean, yes, Goa has been an outlier, but if I were to look at luxury homes per se, demand surged. People have taken, advantage of the stamp duty cuts, circle rate cuts, and probably gone out to buy. But prices, how are you expecting now prices to move?
So, as far as we are concerned, we have seen about a 10% increase in prices in the last 3 months in terms of the luxury segment, definitely. But yes, you're right. Across the board, it has not been, because large number of surplus stocks in the larger sizes were available, and they are now slowly getting exhausted. So looking forward, I do believe that the prices in the luxury segment and the affordable segment will go up for 2 reasons. Number one, that the stocks are diminished, and hence, the availability of finished and ready stocks have really come down. And the second is the cost of inputs have gone up, shot up like anything. So steel, cement, building materials, copper, wire, aluminium, you name it, and the prices are moving upwards. So there is a cost pressure and there is a good demand input. I think a 5 to 10% increase is expected in the next 3 to 6 months.
Shubhankar, what's your own feeling about price movement? I mean, I know all the developers are talking about input prices gone up there, and some of them have been able to raise prices, like the Hiranandani Group has said that they've raised prices by about 10%. DLF has been able to raise prices for plotted developments. But overall, if I look at the price trends, we are not where, let's say, a London is, or the way housing prices are moving even in the United States at a multi-year high. But we are at a start of what everyone calls a multi-year strong housing cycle. Will that apply to luxury housing as well?
Look, Manisha, I think, the last, I'd say almost 10 years was one of the lowest points in Indian real estate, especially when it comes to residential, when it comes to homes. What that eventually led to was a massive inventory overhang. And now what we're seeing, we're in sort of the middle to latter stages of a clear out of the inventory overhang. So it's not like there's a dearth of supply. Yes, all the demand is opening up, leading to a lot of transactions. But the fact that there is a lot of supply out there, and that basically means that it's difficult for prices to move up just yet. But over time, equilibrium has to kick in. And, when developers go back, I mean, even right now, developers have sort of made a slowed down on, new developments, and because, COVID was so uncertain, developers didn't know exactly how to respond. But over time, as things ease out, supply will come back in and equilibrium will kick in. But there will be a small phase before supply comes back into the market when prices will rise a little bit.
All right. Samir, your own experience with the secondary market, how have prices behaved? I mean, they've been fairly flat is what data is showing. But going forward, do you believe that as supply dries up, maybe at least in some of those very tony zip codes, as we call it, there could be some upward price movement?
So, the data is very generic, and, if we have to get micro market specific if we're looking at luxury. So even if I look at Goa and North Goa in particular, where a lot of demand is coming in, there is limited supply of finished product and there is significant demand. So in those markets, there have been price movement upwards. Is there pressure on pricing going forward? I believe there is, both from a cost input perspective, as well as generally in terms of what people are valuing today and are willing to pay in terms of extra space, extra home, clear title. These are all, very important contributing factors.
Gentlemen, thank you very much for giving us that perspective on what's happening in the luxury housing market and what lies ahead. In fact, with the stock markets at an all-time high this year, we're going to see a lot more capital gains money probably moving into luxury housing as well. So yes, demand seems to be here for the long term. Thank you very much. When we return, we put the spotlight on another example of a sustainable building. This is an office complex located in Greater Noida. And this was the very first building in Asia and the 7th in the world to have earned the benchmark LEED 4 Platinum Green certification.